Welcome to the Great Homeowners Real Estate Market Trends for January. I'm John Desmarais. This information is taken from RE Colorado, which is the Metro Denver MLS provider, and it has the statistics from December's market activity. These stats are taken from the 11 counties that make up the greater Metro Denver area. The number of closed properties at 3,034 was 13% higher than December of 2023. On a month-to-month basis, it was fairly flat, the difference between November and December. Now, the median closed price in December was $580,000. This is up 6% from December of 2023, which was at $550,000. This is a healthy growth at 6% year over year. We're happy to see that. But what I notice here, and I want to point out to you, is you'll see this lower trend here, this green bar. This is the multifamily trending over the last few years. And from 2023 to 2024, it actually went down. It was at 417.5 and it went down to 394.5. That's a fairly large drop between the two. On the single family side, we see that it went up here and then it kind of stayed a little bit flat. And then we saw a modest gain from 2023 to 2024. Now, the overall numbers, there are quite a few more single family homes that sold than there were multifamily, which is why even with this downward trend, we saw an overall 6% growth year over year. This divergent path of multifamily and single family, it won't continue. Usually what we're going to see is that if the market is slowing down, multifamily will slow down before single family does. And if the market is picking up, multifamily will lag behind the single family for a little bit, and then it will also start to pick up. That's what I think we will probably see here, is that in the coming months, we're going to see the multifamily come up, but we're going to kind of watch that closely for our market. There were 1,889 properties added to the market in December. Now, this was 9% more than December of 2023, but if we look down here, as expected for the seasonal slowdown, it was 31% less than November. Still, this is a welcome sign for the year over year, seeing some increase in inventory. And while the closed listing numbers trails the market by about a month, the pending listing number is the most current indicator of how active our market is at a given time. In December, there were 2,459 properties to go under contract. This is 9% higher than December of 2023, and it's 16% lower than November. This continues to support my belief that we have an improving market year over year. This metric shows the number of days a property stays on the market before going under contract. At 41 days in December, this was 11 days longer than December of 2023. It's also a 12-day increase from November to December. Now, I believe this is more of a result of the increased inventory rather than a slowdown in the market from a year ago. And then the increase from November to December is expected for this time of the year. The activity by price range, the $500,000 to $600,000 price range, was the most active in December, both for properties that closed as well as properties that came on the market. This makes sense as this is the price range right between the median price of the multifamily and the median price of the single family houses. Down below, the days on the market doesn't really show a significant difference across the board based on price points. And that tells me that the market is fairly stable with no one segment lagging behind the others. Standing inventory, which is the number of active listings for sale at the time that the data was pulled, was at 6,888 homes. This is a 46% increase over last December. The gross sales volume down here was 18% higher than last year. And that means that even with more inventory, there are more homes selling. So overall, I believe we are seeing the signs of a modest improvement in the market. The year-over-year changes with more houses coming on the market and more houses being sold, the increasing inventory numbers and the increase in the days on the market. The 6% increase in the median price, again, from the previous, what we talked about, that's a little divergent. We want to keep an eye on that because the single family is going up, but the multifamily was going down. If we are seeing somewhere around 6% growth, that's a healthy and sustainable number. We'll have to keep watching this to see what happens in the next couple of months. So yeah, these statistics all point to a market that is trending up, but it's not really a buyer's market right now, and it's not really a seller's market right now. It's more of a neutral market, and a neutral market is a healthy market. In a neutral market, overpriced houses are not going to sell. They'll just sit on the market until they lower their price. But a buyer isn't likely to get a steal on an underpriced house either. In a neutral market, the home should sell near its anticipated market value. Now, I believe the key to the 2025 real estate market in the Metro Denver area is going to be the interest rates. Right now, they continue to hover right around the 6.75–7% range. We have expectations that we should see this lower into the mid-6s this spring, and that should help to keep the market trending up. But if the interest rates continue to stay around 7%, I think we might see the market slip in 2025. In the next couple of weeks, I'll have January statistics to share with you. Thank you for your time. And as always, reach out to me with any specific questions you have. I'm always happy to talk real estate with you. Thank you.